Okay, welcome guys to this trader meeting conference call. We're going to do a weekly sort of market analysis and insights to what's taken place in the market so far, what to expect for the week ahead, covering from macroeconomic to political risks that are potentially could impact markets this week. Let's get started. So what are the current market themes that are in investors' mindsets or traders' mindsets at the current moment? What areas should you be looking at, especially for the week ahead? And these are some major macro themes. Okay, so these are not themes that are just specific to this week's worth of trading. These could be ongoing themes that are impacting financial markets. Well, firstly, I've given a rating, right? So out of 3 stars. Okay, what's sort of the most relevant at this week, especially leading into sort of the earnings season, where we've got a high number of tech companies producing their reports. So that's going to be one of the main focuses at this current moment. So that's now come to the front in regards to macro themes. Okay, so be mindful of earning reports on an ongoing basis, especially today and tomorrow. We've got got very strong earnings from tech companies. Today is known as actually Tech Tuesdays in regards to earnings. Okay, so that's I'll touch on that a little bit later. We had yesterday's Tesla's report that came out quite positive. We saw markets and post markets up 2%. Let's see what happens at the open. We've got a couple of hours still. So earnings season's in focus. Second sort of 3-star macro theme would be central bank stance. Okay, so where these guys stand on an ongoing basis. Now, this week is also important for central banks because we've got the FOMC. Okay, and again, I'm going to touch on that a little bit later. Then 2 out of 3 stars will be bonds, bond markets. Okay, what's taking place with bond markets is it's a fantastic indicator for you to keep an eye on to define whether there's risk on, risk off sentiment. Yeah, so look at the bond markets. Now you want to look at the the 2s, the 5s, and 10-year Treasury yield, the US Treasury yield, and that gives you a good indication of how much bonds are being bought up on an ongoing basis. Okay, so do expect an inverse correlation. So if yields fall, then you expect bond prices to be bought up. That's what's in demand at the moment. If bond yields are rising, that means there's less individuals looking to buy bonds, or the demand at the moment is not incentivized towards buying bonds. Okay, so the bond markets is what's leading to investor sentiment from a risk on to risk off. And then our one stars, there are 2 sort of areas that you should have at the back of your mind. Well, naturally, COVID is not going away. Okay, we know that. So the Delta variant, and are those cases continue to rise? We've seen a little bit of a drop off in the UK. US cases are still continuing to rise. Just be mindful of the ongoing scenario here. Okay. And something that you must understand is the fact that investors quickly adapt to new information. Okay, so what I'm trying to say is that if there is something that's completely out of norm, out of surprise, then that's going to have a larger impact on investors. If that information continues to sort of come through on an ongoing basis, then investors start to sort of understand how markets react around that particular surprise news, which is less of a surprise now because it's happened a number of times, and that's why you won't see as exaggerated moves occurring in the markets. Okay, so what happens is it's the way markets price in information is they discount information very quickly. Okay, so just be mindful of that. And then finally, Brexit negotiations. Brexit's back on talk of the town at the moment. So again, I do want to touch on a little bit about that, but yeah, I'll touch on that on the next slide. So what's going on with Brexit? Just to give you sort of a quick overview, if you're not aware of what's taking place with Brexit at this current moment, we thought it was a done deal, but do remember there is a transition that's going to be taking place over a year or 2. Okay, so just be mindful in regards to any latest news that comes out for Brexit. Okay, so we know that the UK has rejected EU's Northern Ireland moves. That's the key point there. Okay, saying that the Brexit deal must be renegotiated. So it's almost that we're going backwards. That there is another potential negotiation on the cards in the upcoming months. So that's something to be mindful of. What are they discussing about? What's the biggest issue? Well, Boris Johnson has rejected Brussels' latest attempt to iron out those problems with the post-Brexit arrangements around Northern Ireland. Okay, so the biggest issue here, which you can see, right, the Republic of Ireland is part of the EU. Okay, whereas Northern Ireland is actually not part of the EU, and that still falls under UK's customs regime. Okay, so now the question is, how do goods get transferred over? And that's where the negotiations are taking place. It's around goods being transported through Northern Ireland into Republic of Ireland, and what is the taxes and any other associated sort of issues that may arise around this that you need to be mindful of. So yes, it looks like we've taken a step back. Negotiations are going to be taking place, and let's see what the outcomes are from this. But do remember, this is a one-star event, in my opinion. It's not of high agenda as of yet, but you must start to do your research and look into this going forward. So what are this week's catalysts? Well, let's start with equities at all-time highs, especially US equities are at all-time highs, okay? And that's pivotal, because we've seen US equities continue to hit these all-time highs a number of times. But every time they hit these new highs, there's less volume coming in the market. Okay, there's less volume supporting higher prices. So it's almost weaker highs are being formed. Okay, so we're seeing almost a slowdown, but a slowdown where there's a gradual incline taking place, right? And those areas that you need to be focused about is, of course, any scares or any growth scares that could impact specific macroeconomic indicators that we've seen. For example, we've got GDP results coming out shortly, so just be mindful of that macroeconomic data. COVID-related sort of issues, rising cases. We saw last week how a substantial sell-off that took place on Monday, most of it was bought up by investors at the dip. Okay, so and that's a theme, a strategy that's being used by most investors at the moment, is buying at every single dip. Because they assume that the economy is going to continue to be supported by governments and central banks. Yeah, so there is a backup if just in case something happens, and that's why every dip's being bought. But the moment that's that's taken on under their floor and that's removed, then we could see a larger correction occurring. So just be mindful that stocks are at all-time highs, but how much of it's being supported by the true events in the markets at the moment, or is it the impact of stimulus packages that are in play at this current moment? So that's the key point there. This week, we have the Federal Reserve meeting that's going to be taking place. It's a two-day event that's going to start tomorrow. I believe it's starting tomorrow. I'll come back to the economic calendar anyway. And what are investors watching for? Well, we're going to be looking for clues on when the central bank could begin tapering back its bond buying. Okay, now this is talking about the QE, the quantitative easing program that most central banks have in place at this current moment, but most importantly, the Federal Reserve. Okay, so every month, a certain amount of Treasury yields, treasuries, not yields, Treasury bonds, as well as other sort of assets are being bought up on a monthly basis. Okay, and it's being added to their balance sheet. Now, there is the incentive that the Federal Reserve could shift their stance from being very accommodative and dovish to showing some hawkishness. That's the question now. How much hawkishness is key? Okay, and that's where we can sort of touch on a little bit later in regards to some of the macroeconomic data. Now, as I've already mentioned, this week is an important week. We have 165 S&P 500 companies that are due to report their earnings this week. Okay, and the focus today especially has been on technology companies. Okay, so the tech heavyweights, shall we say. So today I believe we do have Apple, Microsoft, and Alphabet that will be releasing their earnings. Yeah, so that'd be sort of the three key catalysts for the week ahead. Now, let's have a quick look at market performance overall. Now, areas to look into. So we've seen sort of the euro down, sterling down, Aussie down, Kiwi down. So there's a lot of dollar strength coming through already. Okay, so we've seen it slightly down on the day. Week-wise, not so bad, right? So the euro is actually performing quite well against the dollar, so not much change there. But the sterling is up, right? So it's up overall, but even though we're seeing a bit of a correction because of the Brexit sort of, concern, for the month it is down. Yeah, so just be mindful there. Aussie Kiwi, again for the weekly, not much of a movement there, not much for the movement, but we've seen a bit of a correction occurring. Okay, so there's largely a lot of dollar strength coming through, so we can see sort of up by this amount, so by 0.11%. For the week we're slightly down, but on the month and year to date, it's showing it's quite positive so far. Okay, it's quite positive, the dollar so far. If anything, the weakest out of these FX currency pairs would probably be the Aussie. Okay, so we've seen sort of Aussie go back into lockdown conditions and further restrictions and extension to restrictions being added. So there is some uncertainty around sort of the Australian dollar, but just recently we did have some positive data that came out from Australia. So yeah, just be mindful of my ongoing reports, guys. Now, looking at sort of the equity markets, now we have the US equity market, so we've got the Dow, the S&P 500, NASDAQ, the Russell's 2,000, 5,000, right? So, this is giving sort of a good overview of what's taking place so far. Starting the week, for the day, it's slightly down, we've seen that follow on sort of a little bit negativity sort of, stepping in. But for the week itself, it's quite still positive. For the month, it's positive. Look at this for year to date. Okay, so this is sort of year to date figures taken today. Okay, so taken today. And this was sort of year to date figures from last week. Okay, so we are showing good sort of positive signs year to date in regards to the equity markets, in regards to sort of prices continue to rise. Okay, so the Dow Jones is almost up 15%. The S&P 500 is up close enough 17.5%. Nasdaq has lagged a little bit, but hey, we've got tech earnings coming through. This might sort of give it another push if we start to see those tech reports coming out quite positive. Russell 2000 has probably been the sort of the laggard out of the group of the US equities. Looking over to the European market, so UK 100 so far slightly down for the day. For this week, we're up 1.53%. For the month, we are down. Year to date so far, it's risen 8.14%. From last week's up to nearly sort of close enough to 1.5%. But yeah, we're seeing still a lot more. It's not as positive as the US markets. Okay, so the US equity markets are in their own sort of path, and they have their own fundamentals impacting them. Whereas the UK now, because of Brexit potentially, we have a lot more uncertainty ahead of us. I do note that the majority of the FTSE 100 corporations are international companies as well. Okay, so they're multinational companies, and then the DAX is way ahead. Okay, so up for the year to date 13.17%. So is we're seeing sort of the CAC, the MIB, Italian MIB. Yeah, so IBEX is doing okay. So yeah, overall equities are still outperforming. Now coming over to the commodity markets, gold and silver continues the lackluster sort of sentiment. Year to date down close enough to sort of just above and just below 5%. Not much has changed. You can see daily, the day changed. Barely any movement taking place. So mostly trending sideways, should we say, trending sideways. And the energy markets, looking at crude oil, Brent, we had a bit of a correction occurring from sort of OPEC plus agreeing to increase production from August to 400,000 barrels per day. So yeah, I mean, there is a bit of a correction, but crude oil is still up for the year, close enough to 50%. Yeah, so that's looking quite positive there. Now looking at your bond markets, Now, with bond markets, we are seeing sort of the focus should be sort of the 10-year yield, the US yield. Year to date wise, it's risen just 0.34%. Compared to the previous week, it's still positive. Okay, so we can see sort of, even though we've opened and it's a little bit, I wouldn't say that's a huge negative. Okay, it's just pretty much where it began. It's pretty much break even there. But yeah, it seems like the yield is stalling. It's holding those lows, and I'll bring up the chart a little bit later, and we can sort of review the technicals behind them. Now, central banks wise, most of this has been unchanged. I did make adjustments to the ECB. The ECB previous week was somewhere in this region over here. Now brought them sort of, even more dovish. Okay, so their statement from last week, as you may have read from our reports, is, a further accommodative stance, a further sort of, dovish view that's coming from Christine Lagarde. But this week, the focus is going to be the Fed. Okay, there is no other sort of areas that you need to focus on, just the Fed. Now the question is, are they moving towards being more hawkish? Okay, this is a market moving potential for sure. The Fed is a market moving potential, but are they going down this path? Okay, that's the question. Okay, how likely are they going to move towards the dovish side? Now, if they give indication to tapering, if they do give that indication that they are likely to taper, whether it's tapering in August or September, they give any indication of tapering anytime this year, that's going to be seen as a hawkish start. That's your first step that we're seeing. Now, that's the first thing, right? Whether the taper and how much they taper by. The second is when that taper steps in. Okay. Now, there is a certain amount of probability that has assessed that there is some tapering that's going to be provided from November onwards. Okay. Now, if that's brought in a little bit earlier, okay, now we may see a larger move occurring because of that. Okay, because what's been priced in is November onwards is where the bond purchasing, the tapering may begin. So yeah, those are sort of the questions that you need to ask yourself when you review the ongoing clues that the FOMC brings. Okay, now. Looking through to overall central bank rates, you could see sort of clearly here CAD, Kiwi, dollar around sort of the 0.25 or slightly below the 0.25% mark. The Aussie dollars at 0.1%. The UK is at 0.1% as well. Euro is 0%, and the Japanese yen is negative, so is the Swiss franc. Okay, SMB have kept the Swiss franc negative for some time. So Japan and Swiss franc has been negative for some time. That's why these are seen as your safe haven currencies as well. Okay, Euro has been pretty much 0% for some time as well. They're more likely to go down the route of the yen and the Swiss franc. Just be mindful there. There was talks in the UK by the BOE, Andrew Bailey and co, discussing whether negative rates could be a step that we take, the Bank of England takes. But again, it's not happened as of yet. These were discussions that were taking place towards the end of last year. No further news has come out about that recently anyway. So yeah, just be mindful about where central banks are. But I think what's important is are they more dovish or more hawkish, and who's going to be the leader, who's going to be sort of market moving potential here. We've seen a lot of strength come back in the dollar, and that's sort of hindered the RBNZ sort of move, sort of the Kiwi dollar move at this current moment. But man, I'm not sure how many of you watched the B word interview talking about sort of cryptocurrencies, what's taking place then. Elon Musk even mentioned that most of the money that they've accumulated in the Eurozone by selling their vehicles, Tesla vehicles, a lot of it is where they are paying towards the yield, right? So they are paying their banks to hold that capital with them, okay? Because the Eurozone is generally negative, okay? Even the base rate's at 0%, but institutions and banks are going to be charging a negative. Let's move on. Okay, macroeconomic wise. So just looking through, these are your key macroeconomic data that I'll be focused on. You'll be looking at GDP, you'll be looking at GDP year over year, as well as quarter over quarter. It gives you a sort of good indication to, whether it's moving in the right direction or the wrong direction. Okay, so you can see sort of it's already been highlighted what's going on there so far. Now, do remember, because of COVID, we had those sharp drops that had occurred. So just be mindful of the recovery out of COVID as well. Interest rates, we've already just discussed that. Inflation reports are ongoing and are key to sort of decision making by central banks, especially that we've seen that inflation is overshooting with some countries, right? So in Germany it's at 2.3, the UK is at 2.5%, in the US it's 5.4%. So generally central banks want to keep the inflation rates at 2%. Right, and now we've overshot. Three major countries have overshot that. The EU are stating that they're going to be more accommodative to being, to surpassing the 2% mark, and they're coming close to that level at some point. So yeah, inflation reports. And of course, jobless rates. Jobless rates is going to be important. I think more so, jobless rates is going to be important where we're looking at certain countries such as Australia and New Zealand, where overall their numbers are quite positive, and inflation is quite high in New Zealand, especially if that jobless rate sort of comes down, because they've already got good sort of GDP quarter to quarter and year over year. They might sort of take that next step of not only having a hawkish stance, but maybe raising interest rates sometime soon. So yeah. Now, coming on to the economic calendar. So these are your sort of medium to high impact news, being in red and orange. And yeah, so this is sort of the week ahead. I mean, the week starts off quite slow. The week does start off quite slow. The only sort of data we had was the German. The only data we had was the German IFO business climate, which came out a little bit negative. Okay, not a huge negative. Let's not, no, it's not a huge negative. The forecast was at 102.3. The previous was 101.7. Came in at 100.8. Okay, slightly negative, but not a huge deal. We did have an NPC member also, speak yesterday. And yeah, you can go on the BOE website and find his statement, and it's quite a detailed breakdown of his views in the economy. So that's a good read, maybe more of a weekend read. We had sort of early morning sort of BOJ Governor Crowder speak. Again, not too much relevance there, but this is what you got going forward. Okay, you got the RBA Governor DeBell to speak. We've got in the US, which is going to be an important one, is CB consumer confidence. Okay, this is going to be CB consumer confidence. Again, all eyes are not on this. Okay, do you remember that? But it is high importance. It's going to give you an indication of their confidence levels. Okay. But what's coming out overnight and tomorrow, Wednesday is going to be an important one. So overnight we have CPI quarter over quarter data for the Australian markets. Okay, so Australian economy. So just be mindful of the CPI data there. Then tomorrow afternoon we have at 1:30 Canadian CPI data month to month. We've got the common, the median, as well as the trimmed. Okay, so year-on-year figures as well. So that's an important one for the Canadian market. At 3:30 we have crude oil inventories. Further guidance from this will be sort of an indication of this amount of supply and inventories of crude oil. And then most importantly at 7 p.m. we do have the FOMC statement, federal funds rate, as well as the FOMC press conference. Now the two-day meeting begins today. Okay, so it begins today, this afternoon, US time. It's taking place today and tomorrow, and then tomorrow evening we'll have sort of more indication of what is their methods going forward. Okay, so we're all focused on the forward guidance there. Yeah. Now, what else is there? So moving on to Thursday, again, this is going to be important. I just spoke about this, where GDP is going to be important. We have for the US advanced GDP quarter over quarter being released as well as unemployment claims. In the UK, we did have some UK housing data that came out, I believe, this morning. But again, it's not high impact. But in the US, we've got pending home sales month over month figure. And then to end the week, we do have sort of the sort of European sort of German prelim GDP quarter to quarter. this one's going to be an important one, the CAD GDP month-over-month figure. And then to sort of end the week for where the focus is in the US markets is going to be the core PCE price index month-over-month figure. Now, this is important because this is one of the leading indicators that Fed members use to engage whether they should be hawkish or not. Okay, so this is one of their main indicators for inflation. Now, that's where your focus should also be. Keep doing that, but let's come back over. Yeah, and then we have just PMI, Chicago PMI, University of Michigan Consumer Sentiment, Manufacturing PMI on Saturday in China. And that's your sort of macroeconomic data for the week ahead. So let's move away from that. It's just gone past 12:30. I don't want to sort of hold you up for too long. Now, let's have a quick sort of review. So we've gone through the economic calendar and sort of the areas that I'd mentioned to you guys. Let me just do a full screen here. Let me just bring up some of the assets that I've have listed over here. So now just coming over to the dollar index. Let's look at the dollar index. We're on the daily time frame. I did mention sort of a key resistance around this 93.50 handle. So 93.50 handle, prices stalling to sort of break through this. But overall the upside is still there. So since June, from those lows, end of May, June, early June, we've seen a bullish run taking place from those lows around the 90 handle. Now, we're in a balance. We need further information to come through. But yeah, keep an eye on the dollar index. Now, looking at the US markets, again, looking at the daily time frame, we had the Dow that went on to close at all-time highs. Okay, so it closed at all-time highs, surpassing 35,000 figure. Okay, so that's the round key figure there. So we're back above the 35,000 figure. The question is any follow-through? Now, are we seeing any follow-through? Because you can see how quite clearly, apart from sort of this quite bullish move here, strong sort of almost a shooting star sort of candlestick formation occurring there. We've had a sharp correction, a retest of the high, another new low. So this low is lower than the previous low over here, right? So if I just use some of the tools that I have here. Let me just make sure I'm on the right pen. Yeah, so after we sort of come up to this key resistance here, which is the 35,000 figure or just above it, right? You had a sharp correction back down to this low. Price, retraces, pulls back, and it goes into sort of make this key resistance region over here. So just shy of the 35,000 figure, and then you have a bit more selling pressure coming through, getting down to sort of these lows here. That's a lower low than the previous low here. So even if you take those, two spikes there, the candle closed here, but you could see how this candle broke through the prior low, but the next candle, the next daily candle, pretty much, covered the prior candle. Now that's a strong outside candle. That's a strong, almost closing Marabuza candle occurring there, and that strong drive, this V-shaped formation on the lower time frame, right, has led sort of the next bull run to occur here. Again, coming up to sort of this key resistance around the 35,000 figure. Again, we saw that sharp fall that occurred early last week. Early last week, and then now we're sort of back at those highs again. So now there is weakness on the upside. There is that weakness on the upside that we're seeing. Okay, so the question is, will that weakness continue? And just to sort of highlight that, you can sort of even take sort of these highs over here, exclude and just tighten it as much as you want there, something like that. Okay, that's sort of an outlier. I'm just seeing these highs are becoming weaker on the upside there. Now, S&P 500 has better luck. We've seen much more sort of stronger bullish close occurring there. Again, a very clean bullish trend. Okay, sort of all I'm seeing all the way through, series of high highs and high lows, high highs and high lows. So that is fantastic. Okay, so we haven't seen markets really stall as much as the Dow. Okay, so that's that. Nasdaq, pretty similar there, pretty similar. Very strong drives when it's there's been powerful moves that have occurred in the Nasdaq, and tech companies are in demand. Okay, tech companies is where the substantial amount of growth has come out of for corporations in the US. So, and that's only continuing. Okay, so not only have we crossed the 15,000 figure, we've broken through the 15,000 figure. Again, another sort of round psychological figure. It's just only looking like it's going to continue. Looking at the DAX are pretty much, at those highs, all-time highs. But again, a bit of stall there. Okay, so look for a breakout back above when we're back above 15,800, sort of in this region here. So once we're back above 15,800, that's where you could potentially look as a breakout opportunity. But yeah, just be mindful of any fundamentals behind that. Looking at the FTSE is sort of the laggard out of that the group that we've just seen. We haven't gone on to sort of make all-time highs as of yet, but okay, we have had that bounce. We've had the bounce that's occurred. This candle so far, a strong test to the lows, but it's decided to reject those lows. We may sort of end up closing bullish. There's still got some time to the close. Looking at gold again, stalling, not much reaction occurring. I could pretty much see this as a nice sort of consolidation between sort of the 1750 zone all up to sort of the 1830 sort of zone, and you can just see sort of look at the types of candles that you're seeing there. There's very little demand here. Pretty much the way to view it is that buyers and sellers, pretty much see this as a reasonable price for the price of gold. That's it. There's a balance between them. Okay. There's no instrumental drive. There's no catalyst that's driving more demand in this. There's no, aggressivity that's occurring by buyers or sellers at this current moment. So there's a balance. So it's a market that I'm not sort of too concerned about at the moment. Whereas WTI, from that 15% correction that we've seen, we're back up to sort of the 72 handle. Okay, we're back above on the 72 handle. Now, with the crude oil inventories that's going to be released tomorrow, that could give us further sort of indication of which way it's likely to go. Looking at BTC. Now, the question is with BTC, looking at the BTC charts here, we have this zone in place. Okay, this zone's around the 40,000 sort of mark. Okay, there was. Okay, so we had the B word that came out last week, okay, where you had Jack Dorsey, Elon Musk, and Cathie Woods, right, all discuss the crypto space. I think the focus wasn't more on Elon Musk and his views. His views were actually quite optimistic towards cryptocurrencies, in particular Bitcoin. Okay, so that's good. Then we had some follow-up sort of news from that, where the likes of Amazon, Amazon go on to hire roles in the cryptocurrency space. They're looking for a specialist in the cryptocurrency. Now they have jobs available for developing crypto side of Amazon, but there was also other news that they were going to release or allow payments being made through their platform, Amazon website, by certain crypto assets, whether it's Bitcoin Cash, and so on. But again, that's been knocked back now. So I believe it was City AM that released this news yesterday that led to sort of a large sort of demand in this particular asset. And yeah, that turned out to be fake. That turned out to be fake news. So just be mindful of fake news that occur. And that did lead to a bit of a sell-off occurring. But look, the trend is still there. Okay, don't just let sort of a bit of short-term sentiment to whip you out of a trade. It's still optimistic because we haven't quite stalled at this sort of region over here. So this is the key sort of resistance zone for me. I've applied a downtrend line. When the resistance zone, I'm waiting for the breakout above this for me to be strong bullish as a buy signal. But this current moment, we're potentially going to approach this zone here around the 40k mark. Yeah. Now moving on to US 10-year yields. So we saw a large correction occurring. This sort of move here, once we broke through the 120, so 1.2% sort of mark, that led to a bit of strong selling pressure from last week. But then most of it's been recovered. It's stalling in this region over here. So we're around the 1.26% mark over here. Okay, so between 1.3 to 1.2%. Just be mindful if it stays here, markets will continue as they are. If we see another move lower, then of course we may see a bit of a risk on move occurring. And when there's a risk on move occurring, that's when you will look at the VIX. The VIX, VIX will sort of give you guidance on whether there's fear in the market or not. So we saw from last week where the VIX were around the sort of 16k mark, 16, 17 sort of K mark. not 16K, sorry, 16, 17 mark. It had a large push around up to sort of the 24, 25 mark. We're back at those lows again. Yeah, so, you know, at the moment, things are holding still. You know, you see a couple of red candles, which shows that there is still more optimism, there's less fear in the markets, okay? And then, you know, we do have a large number of earnings going to be released this upcoming sort of, you know, week. You know, as I mentioned, yesterday we had Tesla, so Tesla would have been in focus. Let's look at Tesla. Okay, so let's drop it down to the 1 minute time frame. So this is where sort of the market is at this current moment. Okay, so this is where the previous close is, and this is the pre-market at this moment now. So pre-market's open, it's already open more positive. Yeah, so you know, we're likely to sort of, you know, open around the $663 mark when it comes to Tesla. Yeah, quite positive news there if you're following sort of my ongoing briefs. Yeah, and let's have a quick look there. So we've got earnings from Apple, Alphabet, Microsoft, Visa, AMD, General Electric. Yeah, so those are sort of the key names there. Wednesday, we've got Boeing, Facebook, Pfizer, Ford, McDonald's, PayPal. And then moving on to Thursday, we've got Amazon, Comcast, MasterCard, AstraZeneca, will be sort of the key ones there. Friday, Caterpillar, Chevron, ExxonMobil, Procter & Gamble. So those are sort of the key ones there. Yeah, so just be mindful of earning releases on an ongoing basis. And that's it from me, guys. That's it from me. I'll, you know where to reach out to me. So yeah, I'll speak to you guys soon. But enjoy the rest of your trading week, and please feel free to get in touch with me if you have any questions. Take care. Bye-bye.